Ryan, how you doing?
Hey,
Good to
happy
see you.
Monday. How you doing?
Thank you. Happy Monday to you.
Welcome back, everyone.
Yeah, thank you guys for joining. So today we want to jump into a couple of things: guarantors, credit scores, good deals, bad deals, some things you can't undo, right? So we get this comes up.
Yeah, it comes up
Right.
a lot. So when we structure a commercial loan, a business loan, we usually are making that loan to the business entity. So maybe you're a corporation or you're an LLC, a limited liability corporation, maybe you're a partnership, whatever your structure is, that's the borrowing entity. That's who we're lending the money to. But the human being that owns it, for example, we'll say it's a one man owns a restaurant.
Okay.
So it's called, the Very Good Restaurant, and it's owned by Brian Patrick. Brian Patrick is the 100% owner. He's there, he runs it. So as the lending institution, we expect that Brian Patrick is going to guarantee the loan. So that means in case the borrowing entity can't make the payments, that Brian personally, who's separate from the entity, Brian's a person, the business is a business, Brian will step up and make those payments on behalf of the entity.
If the restaurant can't pay.
If the restaurant can't pay. So it's a secondary mechanism to make payments. So first would be the Very Good Restaurant would be responsible for payments. If they couldn't, then Brian would be responsible. So one of the big questions we get is, what makes a good guarantor? Where people say, can I be a guarantor? Can I,
especially partnership, right? Especially when you have a couple people.
Exactly. So that gets a little more complex. We'll talk about that in a minute. But just with one person guaranteeing, we're going to ask what's called a personal financial statement. It's a 2-page document. It's normal in the industry. We all have a similar version of the same thing. So it's going to ask you your date of birth, your name, your address, what assets you have. So I own a house,
and this is personal. This is what
personal.
I own, not what necessarily the business has or what it's in its account, if you will. It's me, the owner.
It's personally. Yep. Okay. So if you've got $50,000 in your business checking account and $10,000 in your personal, when we look at the financials for the business, we'll see that money. But personally, we don't necessarily see that. So a personal financial statement, you're going to list where you have bank accounts and where you have maybe a 401k or an IRA or a brokerage account, or you own a house. So when did you buy the house? How is it held? Do you own it by yourself? Do you own it with a spouse? Do you own it with a sibling maybe, or a child? So a lot of those things are more and more common nowadays, especially with what's going on in the real estate market. So we just
I guess something that comes to mind, maybe a lot of people are wondering, like, why? What do you need it for?
So we're looking to make sure, a credit union or a bank or any financial institution has a fiduciary responsibility to never put someone in a situation with a loan that they can't reasonably be expected to make payments.
Okay.
So if I see a personal financial statement from somebody, and part of that is we're going to pull your credit. We're going to pull your credit. We want to see what your credit score is, see what your debts are. So we're going to kind of line those two up. So here's your debts on your credit bureau. Here's the things you told us about. Maybe there's some explanation there, or something shows up on one and not the other. Certain lending companies don't report to all the bureaus. Certain loans don't. So there can be a lot of, it's a living document. It's just a snapshot in time. Today, this is how much I have in the bank. This is what my house is worth. This is what my different assets are. I have 2 dependents. They're 13 years old. Gives us a better understanding of who you are and how you've handled your finances.
Okay.
Because we want to make sure that any loan we give you, even though sometimes the person across the table thinks they want the loan or need the loan, but it's not always the right thing. So we want to make sure we're doing the right thing, putting you in with a payment and a structure that you can comfortably make those payments, because all we want at the credit union is our money back. That's all. We give you 100, we want our 100 back plus interest. So part of that is looking at the guarantor. And credit score, I think this is probably one of the most common questions I know I get all the time.
100%.
And
what's the credit score?
What's my credit score? What does it have to be? What's the number got to be? And there's so many different answers. I mean, we could do a week worth of shows on just credit scores. But the bottom line with credit scores is it's a historical average, I'll call it, of how you've made your payments and how you've handled your credit. And the best predictor for in the future how you're going to handle your finances is how you've done it in the past. Even if we're switching lanes from a personal to a business, if you've kept that down, you've paid things as agreed, you've reasonably managed your personal finances, you're probably going to do the same for a business. So we understand things happen, people get sick. Nobody could have known COVID was coming. I mean, all these different things.
The trends are there.
The trends are there, and we're looking for that. So we're looking for a score, I'm going to say around 700 or plus.
Okay.
So you don't have to be an 850. So 850 is the highest theoretical score you could get in the FICO model. So
Normally don't see 850s.
we don't. I can count on one hand in 20 years how many I've seen over 800. So it kind of it's diminishing gains. Once you get over about 720, you're top tier-ish on most people's. Okay. And it can change if it's, it can depend what your payment was, or you put a big vacation on a credit card and the way the statement cut off. There's a lot of things to it, but the biggest part of your credit score is how long you've had credit and your payment history. So your payment history is 35%.
Okay.
And physically, how many months or years you've had your credit is about 15%. So those two things alone are half of your credit score. Half of your credit score is how long you've had credit and the payment history in that time. Obviously, the longer time you've had it, the more good payments, the better the score. But you see all the time, people are increase your credit score. They sell these programs or these seminars, and sometimes it's just time. A 30-year-old who's had credit for, let's say, 12 years, or a 60-year-old who's had it for 42 years, we have more history on the 62-year-old. He might have a worse score. I don't know, but if he's handled it the same and he's got 40 years, he's gonna have a higher credit score.
But someone at 21 and 22, it's gonna be just tough.
Right. Okay. And again, with commercial lending, it all depends. We want to know what you're thinking, what you're doing. We just need
Are you
to
paying your bills on time?
Are you paying your bills on time? Do you understand how to use credit?
So let's get into maybe a little bit more of a complex situation, and that's and I think this is, unfortunately, we see this sometimes too late. So, 3 people get in business together. Yeah. Right? They form the documents. They're all gung-ho about this XYZ business, right? And, verbally to each other, as friends do, you say that my credit is fine, right? So can you talk on maybe like your experience where you kind of see that it's kind of a surprise? You pull, they apply, right? You converse with one of the partners or maybe 2, and then you get these 3 and each one is 34% owner, and then one of them, what's the impact if somebody's got a 500 credit score on that? How do you...
You have to be real delicate. So if I've got 3 owners over there and one has a more bruised credit portfolio situation than the other 2, I have to have a direct conversation with that one separate from everyone else. So I will never talk about one person's to another. If I've got Kevin, Scott, and Brian, I'm never going to talk about Kevin's to Scott or Scott's to Kevin. It's all separate. But it's a conversation we need to have. A lot of the problems we find in transactions that have multiple owners is unmet expectations. So, often it'll be 2 guys that'll be like the money guys, right? And then one guy who's going to, in the scenario of a restaurant. So these are the 2 guarantors. They're the money guys. I'm going to run there. I'm going to be there every day, 60, 70 hours a week, grinding, running the restaurant. When we're all talking about it before we even open, everyone's cool with that. But a lot of times those feelings change. Or the guy who's doing the 50, 60, 70 hours a week and not having a personal life or social life, never seeing his family, even though he didn't put any money in,
he's putting in blood, sweat, and tears.
Right. So it is. You really need to have a good conversation. And a lot of times, obviously, especially in partnerships and LLCs with multiple members, I'm not going to get too complex here, but there's different share classes you can have. So some people have voting shares, some people don't. That's not normally what we see. The normal loan we see is one borrowing entity with 1 or 2 guarantors to that. something to understand about guarantors is, so again, in our restaurant situation, let's say that loan were to go bad, and we come to the 3 guarantors and say, you still owe us $50,000. It's not a third of 50,000, a third of 50. We will probably go to the person with the deepest pockets. That's usually what they do, and say, I expect you to make you sign this document. Well, I'm only a third owner. So, really soul search before you go into partnership with someone.
So is that why, having an agreement would make sense?
It's required. So there's something called an operating agreement.
Okay.
This is one of those times in life where I move pretty fast in life. This is one of those times I really tell people to slow down and really put some time and thought into it. And really, I can't think of a scenario where you shouldn't have an attorney draft it. A business attorney. There are certain attorneys, Andre.
That's what they do.
That's all they do. They do business stuff. So sometimes it's real estate transactions, sometimes it's LLCs, sometimes it's dissolution, shutting down companies. That's all these people do. They're great resources because they've seen the horror stories. And whether it's 2 brothers that go into business that think it's going to work out, or 3 college roommates that we're going to do this, this is one of those times. There's certain things you can get away not getting real good legal advice on, certainly, anybody can fill out the form to get a tax ID number, right? Most people can figure that out. Setting up an operating agreement, and some people tell you, well, they don't need an operating agreement. You can give the bank a document that says we don't have an operating agreement. Technically, you may be able to.
Interesting.
But as a lender, and I know you as the CEO, Andre, you're going to look at that and say, you're asking me for $100,000 to open a restaurant, and you guys can't take 45 minutes or an hour and talk about all these hard things and who's on the hook for what and whose mailing address. I mean, these operating agreements, you get out what you put in, and it should be more than a 5-minute conversation.
Really spells out who does what.
Who does what, how, let's say one of us needs to get out. So there's 3 owners, but somebody needs to get out. How do you get out? What happens if I die? What happens if I'm disabled? Die is usually pretty clear in business. They're gone, who's next? But when you get disabled, so I'm in a car accident. I'm still a third owner of the business, but I'm never going to be fully cognitive functioning again. Then what happens
then?
My kids are minors. So you can't plan for every eventuality, and it gets into another conversation.
But the attorneys obviously know and do this stuff.
They do, and you may very well have an attorney advise all of you to get small life insurance policies, or I shouldn't say small, life insurance policies that make sense for what are called buy-sell agreements. So part of the package of documents you have is an operating agreement and different things and banking resolutions, but to keep it simple, an operating agreement. There's also a buy-sell agreement, which is predetermined. We've already worked out how one of us gets out of this thing later, Andre, instead of when the emergency or when we're all 75 and we might not be with it anymore, when we're in our 30s and 40s, let's set the rules. So whatever, every 5 years we'll have an independent third party value the business, and that sets the business price for the next 5 years. If someone dies, if someone becomes incapacitated, if someone gets divorced, there's all these triggers. So I want to keep it high level, but just know that that's another document that if it's a few, however much money it may be up front, if you need it later, you will well worth it to do it up front. So be careful who you go into business with. We see lots of issues there.
I think entrepreneurship sometimes is romanticized.
Very much
sometimes on the front end you hear all these good things.
Yeah.
But then there's a lot of things that people need to be aware of.
So. And you do, and you see it, and you see, the big examples of someone like Elon Musk or Jeff Bezos, like these guys that are just uber wealthy because they went out on a limb and did it. But and I disagree with some of the numbers you see on how many small businesses fail. Because they're not always a business. Sometimes it's really more of a hobby, or somebody sticks their toe in it and tries to work a day or two, or knows a guy who can get them a contract. That's not a business. But businesses have documents, and businesses have purpose, and businesses, before you open the door and do the big cutting of the ribbon, who are you getting involved with here? I mean, it theoretically, I mean, for businesses that last, you could be in partnership with this person a very long time.
One of the things that I would say, like from our perspective, of credit union, like I think in the years and years, I mean, there hasn't really been that many, right? So like you just said, like there's all these stats of how many businesses really fail, but you know, those that really put the work in and they get the lending and they get the support and they have a good structure together, whether it's family or friends or whatever. I mean, generally speaking, like it works out.
And they know
right?
the
And
industry they're getting into, Andre. That's the big thing.
Like the folks, even the heating and cooling company that takes care of our building here, I mean, they've been in business 40 plus years.
Yep. Because he's there every day, and he's the one walking in, looking at the boiler with me and grinding it out, you know?
Yeah.
So you do see that, and just like every successful business has its own story, but like those things at the beginning, I would just, to summarize it, like one, don't be afraid of talking to whoever's at your financial institution or us here.
It's okay not to know something.
People don't know. Until you've seen a personal
right.
financial statement, it looks daunting.
Yeah.
But when you walk somebody through it,
we'll add it as an attachment.
Yeah, it's just a good thing, and those intangibles. Mm-hmm. As the people making lending decisions, like yourself, Andre, or me taking loan applications, like if you have an operating agreement when it's asked for, it just shows that much more. You're that much more serious. If you still got a horrible business idea, then it's not going to make a difference. But to be honest,
when it just sets you apart.
It sets you apart.
Yeah.
It shows that you've thought about it, that you're not just running in, how much money can I get? That you really put together a budget. You've looked at doing some projections, or, you know, it's not always what it appears. But a personal financial statement, once you've done it once, it'll take you 2 minutes going forward.
And it stays on record, right? We have it.
It stays on record and
keep updating. Well, thank you.
Thank you for having us back.
Yeah, definitely. I wanted to mention to folks, you know, we welcome questions, right? We get questions, and we're gonna do our best to answer that and talk about topics like we just talked about today. There's a lot more that's coming up, but certainly if folks have, please leave us a comment, send us an email, message, whatever.
Yeah, and when we get the questions, I mean, they're usually focused around the same group of things and questions. I mean, it's you know, it's stuff we take for granted.
Yeah,
sometimes.
and just as an example, like we're going to be talking about like budgeting. We're going to be talking about different types of ways to get capital. The government, right? There's a lot of SBA type of Small Business Administration type of loans out there, startup loans. There's loans to existing businesses. There's buying into a business. There's buying out if you're, let's say, retiring and whatnot. So we want to cover
these new things, like not like Airbnb lending.
Yeah,
and I use that as the general term for, you know, properties in desirable areas that you're going to micro lease out into smaller units.
DSC, debt service coverage
loans, you know. So there's all different ways, and as these things change, we try to stay on top of it. But what do you want to hear us talk about? Me and him can talk all day. Right. So if you send some ideas our way, everybody will appreciate it.
There was another one that's interesting, and that's there's a lot that you're seeing with obviously with office, right? And so people are converting offices. They're going from offices to multifamily, kind of thing. And there's some interesting kind of development loans there. So
well, you see some neat things as this younger generation, meaning, you know, I'd say our age and younger, Andre, are getting into political positions and getting into decision-making roles. They're looking at a building that has been vacant as an office building. It substantially is relatively the same. You don't need to add more parking. They'll probably be even quieter. So why not repurpose it? Why not do some kind of special zone or something for it? I mean, it's already got the egresses. It's safe. It's built like a, you know. I saw a real cool one in Pennsylvania. Was they turned a school, and the gym was the common area for the condos or townhouses. So all the classrooms became homes. And in the inside, I mean, like the actual gym was still a gym, but like with a basketball court where the kids would eat lunch, that was like a communal area with fountain and stuff like that. It was really neat, and it was an eyesore.
Yeah.
The city loved it because you have a school district-owned building. Mm-hmm. Don't quote me on this, but I don't think they pay any taxes.
Wow.
And if they did, it was minuscule. And then they do a $9 million renovation. Now you have $9 million, plus you have affordable housing for these people. So yeah, that's why I love what I do. It's interesting. It's fun. It's not the same thing every day.
Nice.
Send some
Thank you,
ideas our
guys.
way, folks.
See you
Thanks.
on the next one.
Thanks,
Yeah,
Andre.
thank you. That's cool.